When trading stocks, it's really important that you use all of the tools at your disposal. That's going to help you make informed decisions about what stocks to trade and when you're going to get involved with a certain ticker. And one of those tools that you should use is relative volume. And since we're talking about stocks right now, one of the ways we like to be involved with stocks here at NetPicks is through the use of options. So we have a free guide that Mike put together. We've linked it above. It's in the description below. And it's going to give you an inside look on just how we use options to trade stocks. So give that link a click and download that guide for free. So what's relative volume? All it is the volume today compared to, which means relative to, an average of the past X periods of volume activity in a ticker. The common method that people are going to use to find relative volume is just overlaying a moving average over the volume indicator at the bottom of your chart. Now, depending on your trading style and your trading strategy, you're going to want to select anywhere from a 5-period to a 50-period moving average. And that's going to help quantify if that current volume spike is large enough to indicate to you that there's a strong demand for the stock. So you'll be looking for, just as an example, the current trading volume is higher than the average 5 days. Now this chart here, it just shows the 50-period SMA. It's overlaid on the stock. Now when price breaks above the moving average, we are looking at price breaking the 50-day average volume. And when we see a big spike like that black arrow, that's going to leave little doubt that many shares are being either bought or sold. So what does that mean if the stock shows higher volume? Well, if the current volume is much higher than what we see in the past, that just means there's more demand for the stock at this price, and it's more likely to move. This is exactly what you're going to want to see when you're getting involved with any stock out there. And when this occurs, it could be a good time to buy or add to a position as long as you have other technical indicators in line with that bullish move. There's no guarantee at all that this move is going to last, but, trading is all about probabilities and not certainties. There's also an indicator called the R-vol indicator. And all it is an indicator. It cites the relative volume with a number that's considered a threshold. And really, it's a more quantifiable way to determine whether a move, for you, is extreme enough to take action on. And of course, you need an accompanying setup. So a reading of 1 is going to indicate that the current volume is in line with the average volume over the specified period. Simply 1 times the average volume. A reading above 1 is considered above the average, and below 1 is below the average. Now, if you're using R-vol, the rule of thumb is looking at a reading of 2, so 2 times the average volume over that period. The setting most commonly used is 10 periods. And the threshold of 2, that's that horizontal line. So when price breaks that horizontal line, I know with just a glance that the current volume is 2 times, at least 2 times, the previous 10 days volume. And depending on how I'm approaching trading, that may be something to take note of. Now you can see where price broke that downtrend line, and it held for the upside. The reading was almost 4 times the average of the previous 10 days. Now, there's other indicators and other factors you're going to want to use in addition to relative volume, of course. Okay, it's a helpful tool, though, if volume does play a role in your trading strategy. Now, some traders are going to like to use the moving average. Others are going to like to use the R-vol indicators, entirely up to you. Identifying the trends and the breakouts with it. So we can use relative volume to do that. So when a stock breaks out of its trading range, it often generates a surge in relative volume. This can be used to confirm the validity of the breakout. Likewise, when a stock reverses a trend, it can generate a surge in relative volume, giving you some confirmation of the price reversal. For instance, let's say a stock is trading between $50 and $60, and it breaks out to the upside through the $60 on above average volume. Well, that's a bullish breakout. So as long as the volume remains strong, that breakout has a high probability of being successful. If that same stock reversed that main trend direction and dropped below 50 on higher than normal volume, be selling volume, that would be a bearish sign. This stock here, price not only breaks a downtrend line, but also a previous area where price was rejected. And it did this on just over 2 times the average volume. Seeing that, a trader will implement their trading strategy. For instance, some traders use a lower time frame on the next day, look for a little flash of weakness, and then buy into the stock. What about timing your entries and timing your exits? So when a stock is starting to trend, you can use the relative volume to find a buying opportunity. So when it's starting to reverse the trend, you can do the exact same thing, except it's going to be selling opportunities. So if you're a trader whose strategy includes buying reversals out of a pullback, you'd be looking for a surge in relative volume on the move back up through prior resistance, through a trendline break, or a reversal candlestick, such as a hammer or a doji. For here, we see the stock break a low. It sets up a reversal candle on high relative volume. It also breaks the rhythm of the downtrend, which is the break of the trend line. It follows up with a very strong bullish candlestick. It's a buying opportunity. We've got a reversal off the lows on high relative volume. On the other hand, if you're a trader who likes to fade breakouts, which just means trade against the breakout, you might use a similar setup, but you would look for bearish reversal candlesticks at the prior resistance level, along with above average relative volume that's selling volume. And finally, relative volume can be used to track institutional buying and selling. So when a large institution is buying or selling a stock, oftentimes it's going to generate a surge in relative volume, and this can help you gauge the sentiment of the market towards that stock. So we all know that money moves the market. The institutions are the ones that push the markets around. So when a trader is entering a position, it can be reassuring to know there's a higher probability of the big players entering the market. So relative volume, that shows large current volume. Now, large is subjective when you're looking to enter your trade. That can be the institutions helping it along. And we have a video about pocket pivots and volume price relationship with those. Now, this is where you want to see a up volume on the current day to be higher than the down volume of any of the previous 10 periods. It could be worth your time to add in an R-vol requirement of 2 or greater, and that you do that before you would be interested in taking the trade. So how do we find these stocks, these momentum stocks? And one of the simplest ways is using a stock screener. This is FinViz. I set the average volume to whatever I want. In this example, it's over 300,000, and look for a relative volume of over 3. And that scan gave me 58 stocks to review. You would just scan through these stocks to see if there's any that are setting up any chart pattern you like to trade. Relative volume, it's a pretty important tool, and every trader may want to consider using it to help make better decisions. Knowing when that current volume has increased compared to the previous, and by a quantifiable amount, that can give you an edge in the market. So if you know volume is showing different characteristics than previous, it can help you confirm breakouts, confirm reversals, and institutional buying and selling. Use it to find better entries and exit points for your trades, and you could probably increase your chance of success in the market. Before you go, please hit like and subscribe to our channel here, and don't forget to download that options guide. The link is above and below. Talk to you soon.